Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you very much for joining me. The Australian dollar extends its bullish trend on Tuesday after reclaiming the 68-cent handle and headed on to the intraday high of 68.61. Presently, the Australian dollar pair is contained by the resistance I've outlined here at 66.60.80. The Australian dollar initial advance was backed by the bullish divergence that I highlighted earlier this week. Along with that is that the RBA rate decision has given the market a slight boost after the statement appeared somewhat hawkish instead of dovish, as the RBA had recently sounded. Governor Phil Lowe said where there has been significant cuts already this year, the board was monitoring the situation closely. From a technical point, though, I feel the market is likely to run out of steam towards this level of 60.80 and turn back to the downside. With the bearish trend depleted, we'll see the bulls at least make one more attempt up here, but I still feel, from a technical point, it's a good place to shorten and keep your stop accordingly to your risk management above 68.80. The bulls took one brief look at the top side, but still contained by the resistance of 111.15.25, and with the long-legged doji posted here, it does give some question whether the market's finding difficulty in continuing. Still, I find that from 111.15.25 should serve as a cap and a good place to maybe start thinking of shortening this pair and see if the dollar can actually regain its momentum. Still to come this week is the ADP non-farm employment change tonight, and then on Friday we have the non-farm payroll numbers, which no doubt are looking somewhat stronger, at around about 187,000 jobs for last month. If so, then we should get a pullback to 110.30, and with the support still remaining at 109.50.70. Well, the dollar yen since the bearish outside range day and even showing a stronger candle overnight pushes towards the lows of close to 108.20. I feel that from the technical point, we're not too far oversold, but there is still enough room to challenge that 108.20 or even seeing a slight extension with 107.50 beneath, but likely to hold. Overall, any advantage should lack momentum. The pound is now pressuring the upside as we get closer to the UK election. Nevertheless, from what I can view from the technical point is that 130.55 is a cap, but still maintaining within this range. And so at this point, I still don't have a strong view as the uncertainty ahead is still a little bit cloudy. When we look at the gold, well, it reached its objective overnight of 1,478.82 after posting a high of 81. From the retreat does suggest that the market may take a pause here, and I'm going to sit neutral for the moment and see where the market lays. The reason behind that is in the past we found this pattern being rather disappointing when it gets to the top side of its range like it did here and fell for 4 days. And we could see this pattern happen again. So I'd rather sit out at least for 24 hours and see how it plays. Finishing up with oil, well, the market took a challenge back to the upside and slightly hesitant. Still ahead to come is the OPEC meeting, and no doubt the market will start showing a bit more volatility and therefore could see, as indicated by the from the technical outlook, that the bulls are still holding to the helm, and we should see a push higher, with the objective holding at 56.70 and higher towards 58 to maybe $60 a barrel. Well, that wraps up for today. Thank you very much for joining me. And as always, look out for the intraday report and hope you enjoy the great start to this new day.